Hey guys, welcome back to the channel. My name is Ryan. For those of you joining for the first time today, happy Cinco de Mayo. I hope you guys have a good weekend. Get out there, just enjoy yourselves, spend some time with friends and family. You know the drill. Guys, I just want to take a quick minute. Earnings was this morning, and you know what? It was a pretty good earnings call. There was a lot in there that I really liked hearing, and it's just good to see that we're coming back, and that movie theaters are not dead, right? Like you can see that in these numbers. We'll talk about that in a minute. One thing that I'm taking as a huge win here today, guys. All right, every single earnings call we got demolished, right? After the earnings call, we got demolished. Today, guys, that didn't really happen. All right, it dipped for a little bit, but it bounced right back up. We hit $6.11 at one point today. We were hovering right around $6 for a good portion of the day, and then of course they wanted to bring it underneath that $6 mark so that all those call options wouldn't expire in the money. Guys, it finished 2 cents below, or I'm sorry, 6 cents below where it opened. That's really not bad considering how bad it usually is on good earnings, right? And especially how good this earnings was, all the different things that we've talked about. Guys, a couple of things that really stood out to me when and more importantly when I'm comparing it to 2019 numbers, right? Like not just like the year over year number, but going back to 2019, because everybody talks about pre-pandemic, and everybody always talks about the 2019 numbers, right? So the revenue from 2019 was 1.2 billion. The revenue this quarter, first quarter 2023, 954 million. Guys, this is pretty awesome. That's only 300 million difference, right? And it's not even 300 million. It's two and a half, 250 million difference from what it was pre-pandemic. And this is with, let's see here. In 2019, there were an average screen count of 10,684 screens. Right now, 2023, an average of 9,998, right? So that is a lot less. I mean, that's almost 700 less screens, and the numbers are getting that close, right? Like there's so many of these numbers that are getting close, and just the growth that has been shown from last year. So now I will talk about last year. The growth that's seeing from last year is just incredible. And if we continue down this path, guys, we're going to be back at pre-pandemic levels in no time. It's going to happen. There's no doubt about it. Debt being repurchased and being refigured out in some of the cases, repurchased in some of the cases. Guys, they're doing the right things for the company, and I think that's one of the things that I've talked about it in the past. So I'm not going to beat a dead horse, but that's their jobs, right? Their job is to make sure the company's doing well. And I know that a lot of you don't agree with me, but good fundamentals in the company is just going to help. It's not going to hurt anything. It doesn't matter what you say. I've yet to hear somebody tell me why good fundamentals will kill the squeeze play. So until that happens, I'm going to continue down the path that I'm on and believe that having good fundamentals will help the play, because they shorted the stock because they thought, everybody thought it was going to go bankrupt. I mean, when you look at what happened 2020, after Q1 2020, nobody thought it was going to survive, and it did, and that's where this whole place started from. It originated then, right? A little bit before March of 2020, obviously, but that's when the movie theaters really were heading down that bad path. But guys, we're not at that point anymore. So once you're cash flow positive, and once the company is looking just really good on a balance sheet all the time, which it's starting to, and it has been, and it's progressively getting better, it shows that the company's not going anywhere. So these short positions are just sitting there, essentially worthless to the people who have the shorts. It's going to cause somebody to close, right? It's going to cause somebody to close their position. I've said this in the past. I'll say it again. It's going to be a small hedge fund. There's going to be a small hedge fund that has maybe a you know a few 100,000 shares that they shorted, a couple million shares, like nothing crazy on the hedge fund scale of these shorted shares that's going to cover, and it's going to cause that number to go high. Once that happens, it's going to margin calls are going to kick in. You're going to see the rest of the hedge funds have to follow suit. It's going to start at the bottom. It's going to work its way up until these big hedge funds also have to start closing their positions, and that's when we see our moon tickets go into effect, guys. It's coming, no doubt about it. There's just no way they're getting out of this. The fact that earnings was great and they tried really, really hard to suppress the stock today, and they just couldn't do it. They couldn't get it done, and they won't be able to continue to get that done for themselves. Guys, we got this. Stay positive, stay motivated, stay motivating, and I will see you guys next week. Thanks. Bye.